Good morning, everyone. As you can tell, I am indeed from the United Kingdom. I do not have as much energy as was put into that lovely introduction because it's about 3 a.m. for me somewhere on the planet, and I got up just a couple of hours ago. But I tell you what I am excited about. As well as speaking to you wonderful people, I managed to meet yesterday Eduardo Saverin. Did any of you catch him here yesterday? Did you know he was here yesterday? Some of you knew he was here yesterday. And you'll know he's the co-founder of Facebook. And I've got to tell you, when you all become billionaires, as you all surely will, and it is surely the reason why you are all here, please promise me you will be as humble as he was. It was extraordinary. I don't think I've met somebody as nice, certainly not a billionaire, and I've met a few, as humble as this chap. And I think it's a great credit to Echelon that they have people of that caliber who they're pulling into the event. Yes, indeed, somebody just whistled. You're welcome to applaud as well. I'm assuming you weren't whistling at me, but what I was saying. I haven't been whistled at ever. What I do want to tell you is, putting aside the sort of mega entrepreneurs for 1 second, what you all have running through your veins, in your DNA, is something which every government in the world, with possible exception of maybe the North Korean and the Iranian government, but virtually every other government in the world is desperate to get their hands on. And it is the entrepreneurial gene. That is what we from governments around the world, and as you see, I represent the British government, are desperate to get hold of. Entrepreneurs of outstanding ability, entrepreneurs with incredible technologies. And the reason we're after that gene pool is because it's you who creates the wealth, creates the jobs, drives the economy, increases living standards, and sadly also, I'm afraid, helps pay the taxes. In most cases. I myself run a private equity fund. We invest hundreds of millions in various businesses. We see hundreds of business plans. And I started the company. So I'm also one of you. I have the same genetic coding of entrepreneurship, and so much in demand are we entrepreneurs that the British government approached me about 10 years ago, and they said, would you, as well as running the asset management company, as well as doing your own investments, look for outstanding entrepreneurs from India, China, Malaysia, Singapore, as part of this program, with a view to doing the deals to land the best of the best in the UK, from where they can go global, from where they can build their companies into multi-billion-pound businesses. And what I want to talk to you about right now in this talk is that over the last 10 years in this program, we've brought over 300 global companies to Britain. We have raised over $1.5 billion US for those companies, those mere 300 companies. Therefore, their market capitalization is significantly above $2 to $3 billion. When we met them, every single one of them was at most worth $5 to $10 million. At most. The vast majority were worth significantly less than that. We were instrumental in not only raising that capital for those types of companies, but accelerating that market cap. And speaking of outstanding entrepreneurs, I said, one of the reasons I was speaking to Eduardo was because they've set up an office in the United Kingdom. Global entrepreneurs, global businesses, as you will already know, end up in Britain. Given that we had all this data of the companies that we were helping, we thought it'd be useful, given the rise of global entrepreneurship, to share some of the findings with you of what the characteristics were between those who get a podium place, those who get on the podium, get a medal, they're in the top 3 in their field, and those who don't. And by those who don't, I don't mean the ones who fail. I don't mean the ones who go bust. I mean those who come forth. We went through all the data, and we thought it'd be very helpful to tell entrepreneurs what is the difference, not between somebody who comes first and who fails. You all know that. You all hear all the platitudes about persistence and working all hours and entry barriers and all the rest of it. You can find that out anywhere from any business person or any book. We wanted to tell you something more valuable than that. We mined all our data to see, well, what's the difference between first and fourth place? And if you think about, say, something like the Olympics, heck, we wouldn't mind coming fourth on a global race to build incredible, outstanding, multi-billion-dollar companies. We wouldn't mind coming fourth. But what's the difference between first and fourth? Maybe we've got more to learn, not between the difference between success and failure. After all, the gap is so wide, any fool can tell you the difference between success and failure. But the difference between the absolutely extraordinary, which you all have ambitions to be, and fourth place. So a non-podium place. Maybe there's something to be learned from that. Maybe there's something to be learned from all the data of these companies to see, well, what was it they were doing? The lesser known things. The things we don't hear about from the entrepreneurs. The hard data. What were these companies doing to raise that extra bit of capital, to make their companies market leaders, to go from a $5 million valuation to a $500 million valuation? What was it that we could learn or find out or discover that we can tell you, which you'd find helpful? So we went through the data. I'm going to tell you in broad terms. I'm going to give you hard numbers as we progress. One of the first things we asked, obviously we're looking for companies which are looking to go global from a UK base. Doesn't mean they won't have a base in Singapore or India or China. They will. But specifically a UK base, either for strategic reasons or just because of market access. So we asked them, what were the key reasons for setting up those global headquarters? And you'll all know that some of the biggest companies in the world, whether they were born in Britain or not, have bases in Britain, whether it's Facebook, Google, Twitter, Microsoft, or whether it's homegrown British companies, the likes of Vodafone, British Petroleum, and so on. So we asked the younger entrepreneurs, the type that we go for, the outstanding technology companies, the outstanding entrepreneurs, the startups, the high-growth startup tech companies that we look for in the Global Entrepreneurship Program. These are the key reasons. And the reason I want to tell you these key reasons was our companies, 90% of them were in existence 3 years after setting up. That's the exact opposite statistic for virtually every other startup anywhere in the world. Take any country in the world, and without fail, 90% of startups are dead after 3 years. So if you look at the person to your left and the person to your right, maybe so much you don't want to take their business card. You might not need it. Of course, here we're going to have a collection of billionaires, so I might be wrong. But our ones, the pool that we're selecting from which I'm drawing the data, 90% were successful. So what was it about them? Why did they want to set up that global base? What were the characteristics? So let me run through some of these. One of the key factors that they mentioned was the brand aspect. There is a great brand value of saying you've got this establishment in the UK. Now, of course, I would say that. The British government, I've got a sniper pointing a gun at me right now if I wasn't to say that, and I don't keep on script. But actually, there is a great brand value based upon the countries you're based in. If you're just trying to sell to a foreign country without having the commitment of having a base there, as you know, sooner or later, your customers are going to question whether or not they really want to increase the contract sizes if you're only flying in and out. That was one of the key factors which came up time and time again with the companies that we raised finance for as to why they wanted to establish. And it was usually a European or global headquarters, and it was Britain that the vast, vast majority chose. As you know, the Fortune 500 or even the largest companies around the world more set up their European headquarters in Britain than any other European country. The next factor was proximity to customer. Setting up and incorporating a company there that came up. So we had about 80 to 90% who said brand value for the UK. 80 to 90% said being close to the customer. Something which really resonated, which actually came as a bit of a surprise to us, was the third thing which came up. And about 70% came up with this. And it was market size. The vast majority of you probably don't realize that the UK is the fourth largest economy in the world. Fourth largest. Tiny little island, which has had quite a bit of impact around the world over the years, I'm told, but fourth largest economy in the world. But the one thing people don't realize about the EU, in which the UK sits, it is pretty much the largest trading zone in the world. $14 to $15 trillion in GDP per annum, which is about the same size as the United States, and a larger population than the United States. So we always hear about America, of course, and of course people have companies and bases in the States. Europeans, certainly the Brits, don't brag as much about the size of their market. $14 to $15 trillion in market size, even if you've got 0% growth. There's not much point having 10% GDP growth if the GDP base you're working from is only $500 billion. When you're working on $15 trillion of goods and services every single year without even an ounce of growth, then just imagine what 1% growth in a market like that does. Set up a UK company, passport throughout the EU, free trade, free movement of goods, and you can see why. So that was number 3, was one of the key reasons, market access. We were surprised because we were surprised that so many of the entrepreneurs realized the size of that market. And very often they don't, and certainly the size of the UK market. Number 4 was a desire to emulate peers from their own country. Many had seen big companies that were out of India. It would have been the likes of Tata. They'd seen the big peers, and I say with Singapore, for instance, we had a meeting with Temasek, who set up, as some of you will know, there's a state visit from His Excellency the President from Singapore later this year in September. It was to emulate the big success stories out of their home country as well. What I want to do is get into some hard data now in terms of what was it behind the entrepreneurs which we felt led to success. For instance, what were their prior jobs? The ones who were the best of the best that we picked, because this will be useful information to you when you're looking at the businesses you're setting up. Had they, for instance, always been entrepreneurs, or had they had another job? Were the most successful companies that we analyzed, not just the ones we dealt with, but we also looked at data from venture capitalist investments, angel investors. Were they always entrepreneurs, or had they worked elsewhere? We found that the vast, vast majority were far more like a Michael Bloomberg, who'd worked somewhere else, than a Bill Gates, who'd always been entrepreneurs. Now that goes somewhat against, it's counterintuitive to the sort of the usual glamour story we're always told about entrepreneurship. You drop out of college, it's the only thing you've ever done, it was a great calling. Actually, the vast majority for whom we raised the capital who've become very sizable companies, they'd worked elsewhere before. They hadn't just been born entrepreneurs. The second thing we looked at, and we had about 80 to 90% which fell into this category, was how many were dropouts? How many were, say, the Mark Zuckerberg types, the Steve Jobs or the Bill Gates types? And how many were the Google types who did their PhDs, who saw it all the way through? Again, somewhat counterintuitive to sort of the movies and the legends that you hear about. Virtually all, 90% plus actually, were not dropouts. 90% plus were graduates. And I'll speak a little bit more about what we're doing for graduates, how we're attracting graduate entrepreneurs to the UK in a second. The vast majority were graduates. It didn't seem to be a problem that they might not have had a graduate degree, but they weren't dropouts. Being a dropout was incredibly rare, and there wasn't a correlation that we could find between that and success. So if you have managed to get a degree, don't be too disappointed that you completed your degree course. What about some of the sectors? Now, sectors is interesting. People are always looking for great ideas in terms of which sector should be in, should they be in, or should they be looking for ideas? And they're also looking for ideas in terms of, if I'm in this sector, is it a good one that I should be in? So we went through some of the quoted companies. We looked at the data from venture capitalists and private equity houses which were funding various sectors. And then we linked that across to see who's most likely to be getting funding now. And I don't just mean the obvious sexy sectors that you hear about and they become flavor of the month and then they go away and people turn up maybe at conferences and say, oh, we're in this sector, and everyone gets all excited and they forget about it a few months later. We're talking about more long-standing than that. So what we did is we looked at the quoted companies, which were, over the preceding 6 to 12 months, having the fastest growth rates in terms of increasing their market cap. Because the quoted companies, the IPOs, have a direct link to the valuation of your companies in the private sector and how much you're going to be able to command. If you tend to be in a sector where everything that's listed is growing through the roof, the chances are your valuations are going to be commensurately higher and you're more likely to get funded. That's certainly the link we found. So which are those sectors at the moment that you might get very excited about? Some of them are obvious. Some of the obvious ones are actually not very good for getting funding. There's a lot of people getting excited about things they shouldn't, and there's a lot of people not getting excited about things they should. So let me reveal what some of these sectors were. The ones that we found getting the fattest valuations and in parallel their quoted equivalents getting the greatest rise in market cap, so creating the greatest wealth for their founders. First of all, those involved in fat and diabetes. It's not something you hear about much. Not weight loss drugs. So we broke the companies down by sector. We looked at the ones which were listed. SaaS and e-commerce, pretty bad. Well, that might not come as a surprise because we seem to have gone through the peak in valuations there, but we weren't seeing much happening there. 3D printing, you read about it a lot. Not a good one for raising capital, not a good one for their listed peers. Cloud, yes. Hosting related to cloud, no. Again, you only need to look at some of the listed companies. Cybersecurity, yes. Those around junk food, yes. Still, after God knows 100 years since McDonald's, but we still haven't had enough. Junk food companies, not tech, but still. Food inflation, those companies playing around food inflation, the rising cost of food, in particular, protein food supplements. So whatever food technologies that are around protein food supplements, we're seeing those, the likes of Tyson Foods, doing incredibly well. Gambling equipment makers. Again, not something that you hear about at conferences like this because everybody wants to talk about the sexier stuff. Well, actually, the gambling equipment makers are doing phenomenally well. Vanity companies, yes to jewelry, no to beauty. Travel, no to auctions like eBay, yes to e-travel companies like Pricelink. What does that have to do with correlation to success? Well, we found that if you were getting involved in these sectors with a sufficient proximity to when their listed counterparts were rising in value, there was a strong link between that and raising money compared to if you're looking at listed sectors which weren't going through the roof. Let me tell you about just 3 of the kinds of companies we brought to the UK so you get an idea of the kind of global businesses that I'm talking about. We had one company which took a technology spin-out of NASA. And very often we're looking for companies with intellectual property and exploiting that intellectual property. They took clean tech, air purification technology from NASA. NASA had a problem with the space shuttle. They had they discovered that the purity of the oxygen, the purity of the air in the space shuttle meant that the food would go off a lot quicker. So they needed some kind of air purification system. And very often what NASA will do is allow the scientists who develop it to be co-owners of the patent. So we found one of the scientists, and he wanted to create a pocket-sized air purifier which you could put into a room like this or on the subway or in a hospital, and it would clean up the air in next to no time. Great as an anti-terrorism measure on the subway if you're looking at a smallpox leak. Great in hospitals for preventing infections. That was one of our companies, a company called Lunar Air. We took a water purification company, and you can imagine even on an island like Singapore, water is going to be, and pure water is going to be a problem for the next 100 years at least. Water purification company got funded by the Bahrain Sovereign Wealth Fund. That was one of our companies. One of the key characteristics of the companies that we found, all the companies that we looked at, was that the hottest themes, when we asked them, how did you get into this sector? It wasn't something they could have picked looking backwards. It wasn't a case of them saying, well, actually, we just found the sexiest sector and then got into it. It was very often where they were working. It was serendipity. It was accidental. Now, that actually makes a lot of us feel better in terms of the areas that we're in. But if you're lucky enough to be one of those people who has a blank sheet of paper, then I recommend you do pick some of the sectors that I already mentioned and some more, which were the quoted companies that we found, which were doing very well, were a precursor to you being able to raise money. For instance, online gaming, we looked at companies, most of you won't even have heard of, have you heard of Shanda Games? Most of you won't even have heard of it. It'll be good for you to know that it's a $1.8 billion company and you haven't heard of it. What we found was that a lot of entrepreneurs who didn't necessarily do so well were attracted to the names they'd heard of. The ones which tended to do well tended to be working in the same sectors as the companies they hadn't, or you and I might not have heard of, but had been doing incredibly well. So we found in online gaming, get companies like that, or in digital dollars, processor companies. They were raising shed loads of money. Companies like TSS, you won't have heard of. It's only a $6 billion company. But because it's not a Facebook or a Google, nobody talks about it at conferences. Well, digital dollars, processor companies, we're very interested in. We're very interested because their listed counterparts like TSS have just gone up 122% in 1 year. And they're worth $6 billion. So we want to know who's in that space because there's only about 4 or 5 companies who are listed anywhere in the world. So there's going to be room for 1 or 2 more in digital dollars in processing, in online gaming like Shanda Games, and so on. So that's how we were looking for them in all of these areas. We then asked the entrepreneurs, okay, look, what about attitude? So we did a qualitative measure. Before I go on to how much returns they were promising and how much returns their investors got, so you get an idea of how much money you should be aiming to raise, what's most likely to be successful as a raise, and what kind of returns you ought to promise so you don't under-promise or over-promise and increase your chances of raising money. We asked them qualitatively how they viewed the entrepreneurial journey. And I made some notes based on those answers, and in broad terms, the most interesting ones was the vast majority who said their ambitions were to go global from day one. There was a significant correlation between the companies that raised the most capital, that did the best, not just in our program, but the ones that got funded, who had the attitude to go global on day one, as opposed to, and the opposite was that, ones who said, well, we're going to start off in this country, and then we're going to do this, and then we're going to do this, and we're going to do this. And the reason for that, I guess, in hindsight, what made sense was if you're leaving going global on day 365, you're probably going to be dead anyway by then. It's going to be way too late. We found a significant number who were looking to go global on day one, hence the name of the title of our program as well. One of the key reasons they wanted to go global, particularly for the Asian companies that we found, the Indian ones, the Chinese ones, Singaporean, Malaysian ones, was this. If I were to draw for you a map of the world which was resized so that each country's size was based upon the number of people who lived on $1 a day within its borders, then actually the biggest countries in the world, two of the biggest countries would be China and India. So if you're thinking those are your markets, because your markets clearly can't just be Southeast Asia, not enough population, then you can see why so many of these businesses from this region wanted to go global, because the region actually, despite growth rates, wasn't big enough for their ambitions. They diversified away risk by tapping into the other two major markets simultaneously. The European market, with its $14 trillion, which is what, 7 Chinas? And the US market of a similar size. That was critical to their success because a hell of a lot of errors are forgiven when you're swimming in a big enough pool of customers. The ones that didn't succeed were the ones that were looking at, we're going to start off just with the local market, which was a very sensible, clever thing to do 10 years ago, 20 years ago. The world just started changing way too quickly. I want to dip in very briefly. I've talked about the global entrepreneur program, the kind of technology companies. Before I tell you about the rates of return that the most successful companies promised and the kinds of capital they delivered, I want to tell you about a sister program we have for graduate entrepreneurs called Sirius. Let me put the... Oops. Graduate entrepreneurs, and this is a great program I've never seen any other country provide. Teams of 2 to 3 who've set up businesses. The UK government is offering up to 75,000 Singapore dollars to that team, visas, incubation centers, mentoring, logistical help to set up the companies and help move their intellectual property into that UK base. And the guys are at our UKTI stand. So imagine the incubation from a British government source, the UK government source, 4th largest economy in the world, helping your business establish and tap into global export markets, mentoring support, all that advice. One of the things that we found from our global entrepreneur program about the most successful companies, the biggest, and we found this from when we had prime ministerial delegations abroad, is their willingness to work with government. The biggest companies, whether it was, I say, Vodafone's or Virgin or BP or whoever it was, the biggest companies had a greater willingness to work with government than smaller ones did. For whatever reason, maybe the smaller ones had just had bad experience with government, but the bigger ones always were on those delegations. They always used government to open doors. So we developed this program, the Sirius program, to help the graduate entrepreneurs get access to the same kind of government handholding that normally only the bigger companies have, the door opening. I think you'd be absolutely, if you're a recent graduate, it means 2012, and graduate means bachelor's, an MBA or a PhD, any of those types of degrees, I think you'd be absolutely nuts when a government's actually paying you. And as I said to you earlier, governments around the world want to get their hands on your DNA to the extent that they're willing to pay you and incubate your companies, pay for the incubation, pay for the export assistance to tap you into the global markets. If you turn all that away, well, in a way, it's good for the governments because it self-selects the ones who aren't going to succeed. I would say to you strongly, rip the arms off governments, British government in particular, who are looking to do this. The deadline for the next series of applicants is only 30th of June, but I'm reliably informed by my colleagues it takes all of 30 minutes to fill in the application, and all the details are on the website and at our stand. That's how desperate governments have become, how keen they've become to attract what you have in your bloodstream, this entrepreneurial gene. So just wrapping up in terms of what other things we found from the data. We looked at the angel investors who'd invested in companies, and we asked them, what percentage of you were successful? And what kind of returns did you get? Now, these weren't the companies, these weren't the angels invested in our companies. This was angels across the board that invested in British companies generally. And statistically, it's pretty similar to what you'd find in investments in most other countries. 40% of the angels who'd made investments said they'd suffered a loss. Okay, that's after they'd gone through all the due diligence and the pre-selection. I know what you're thinking, not your problem. True. But 40% suffered a loss. 26% exited through a trade sale, 16% went on to sell to other shareholders, 10% was a third-party sale, only 8%, and you'll know this statistic anyway, was an IPO. For all of you who put IPO as your preferred exit, it's not very impressive to angel investors. It's only about 8% do the IPO route. What we then ask them is, okay, what kind of returns did you achieve on the investments that were successful? So the 40% that made loss was obviously a negative return. 10%, only 10% of angel investors actually made more than 100% return, got more than double their money back. The rest, so 50%, only made between 0 to 100% return. What does that mean for you? Well, if you're going to promise IRRs over 100%, that's going to be really the starting point that most angels are realistically going to be expecting you to deliver, only because 1 in 10 of their companies doubled their investments. Only 1 in 10 doubled those investments. We asked them, okay, when you went through the selection process as angels, how did you reject them? How many did you go through? How long did it take? 60% of all companies were rejected within 30 minutes. 25% were rejected within 3 hours. 10% were rejected after a full day. Only 2% that presented to angels actually raised money. I'm not trying to put you off. Only 2% that presented to angels raised money. And don't forget, 40% of that 2% went on to lose money for the angels. Now, you might say, well, angels are pretty bad at picking winners. I mean, could you actually do any worse than that? Half of the ones they picked, almost half the ones they picked lost money, and that's after they rejected 98 out of 100 companies to begin with. Or it might say something about the kind of business plans they're being presented. One thing was for sure amongst the angels, the things and what we found on our qualitative analysis of the companies that we looked at through the Global Entrepreneur Program, the technology companies that I said we helped raise over £1 billion, so about $1.7 billion for, startup companies, high growth companies like the ones in this room. The key differentiator we found of the ones that made the grade and that didn't was we were asked for 2 things almost always in our deal making. So each one of the Global Entrepreneur Program people, like myself, are called deal makers. There's a flashing thing here which says time's up. I think it's meant for me. You'd be pleased to know. So I'll wrap up on this note. The deal makers, such as myself, I say for India and China, well, the one key thing that we found amongst all the questions we were asked by the companies such as yourself, 80% wanted door opening. They wanted the business development. They wanted just pointers in the right direction. This is our key wish list clients. Help open the doors. And through the British government, that's what we help do. 80% wanted that. The key differentiator, which allowed us to pick the winners from the losers when we would meet them early on, was the ones when we showed them where the door was, the ones who were able to just get on with it, do it themselves, with actually relatively little hand-holding, were qualitatively different to the ones that didn't succeed. The ones that succeeded actually only needed the lightest touch, the gentlest nudge to the right direction. The ones that needed the greater hand-holding took longer to get back to you. Asked the more basic questions, actually they tended not to succeed. So if you've got gaps in your team where you think, you know what, you're just not responsive enough, you're just not asking the right questions to which customers you need, and when you're getting pointed, you're just not following through quick enough, then fill that gap one way or another, because it was one of the best determinants for us between success and failure. And we, like the angels, were judging those companies within minutes of meeting them. So it wasn't just what we were doing, the angels were doing it as well. You saw the numbers that got rejected very quickly in a very short space of time. I could tell you far more, lots more data on this. I hope to see you at our UKTI stand to tell you more about the Global Entrepreneur Program for those high-growth tech companies from here who see a strategic reason to go global on day one, who need help with landing in the UK from where to go global, tap into that $14 trillion market, have the government help them take their business to all parts of the world, whilst obviously keeping a base here, or about the Sirius program if you're a recent graduate in the last 2 years, a team of 2 to 3 who want to know how to get money to set up in the UK, how to get the visas, how to get the incubation to set up in the UK, basically be totally carried in a red carpet kind of service to set up in the UK, then I'd love to see you at the stand with my colleagues. And I wish you all in becoming the next Eduardo Savarins. Thank you very much. Thank you.